Let's turn to a note catching our attention today, and that's Deutsche wrapping up its Global Autos Conference and publishing some key takeaways on the state of the industry. The bottom line, automakers, they say, are optimistic, consumers not slowing down, and major automakers could even be primed to beat and raise next earnings season. Joining us today is Deutsche's lead auto analyst, Emmanuel Rosner. Emmanuel, great to have you. It does sound like the tone, you argue, is pretty optimistic.
Yeah, thanks for having me, Carl. So we had close to 50 automotive corporates last week at our conference, and the tone was optimistic across the board, but certainly from these traditional automakers, GM, Ford, Stellantis, essentially saying, look, the consumer is not, hasn't weakened. We're not seeing a weakening in autos demand. Prices have held up really, really strong. Incentive have only crept up a little bit. And so far, so good, essentially, right? Demand is there, pricing is there, and that should result into really solid profitability like we've seen so far. No real reason to be worried about, the second half. Now, it's clearly a positive surprise versus, I think, ingoing expectation. Most investors would expect prices to moderate, eventually, and I think the companies do as well. But it doesn't look like it is happening as we speak, which could indeed set up for probably pretty strong second quarter earnings from these guys, as well as potential, upside for the full year outlook.
That's pretty interesting. There had been some who argued that the EV strategy for both GM and Ford was just going to be too expensive, the adoption curve too shallow. They'd have to make some tough choices on the ICE business versus the EV business. It sounds like you think they were pretty stubborn in their commitment to going forward with it.
Certainly, we've seen a fairly decent amount of, doubling down on ICE as well, right? I think we've seen many, billions just announced over the last few weeks by General Motors for the future generation of pickups and SUVs on the combustion engine side. So I think they're managing their cash cow extremely well, but also aware that they need to invest in electrification. There's still a lot of investor concerns around the profitability of it. Both GM and Ford have had issues, getting them produced, really, but mostly doing that profitably. But their message is very much, we're at it, we're taking cost as fast as possible. And also, we're going to be pretty opportunistic. Look at these, partnerships announced over the last couple of weeks with Tesla to essentially enable their users to use the charging stations from Tesla. That's a way for GM and Ford. In a way, it's a bit of a capitulation, but it's also a way for them to save on capex and reduce their own costs and boost adoption, of the EV technology among their customer base. So I think overall, the message from these automakers is very much, we're at it, we're committed, and we're having some traction. Certainly, they will need to execute against it.
But did you have Tesla at your conference? Because wasn't the concern that they just control the market when it comes to pricing and have been lowering prices repeatedly, which will ultimately hurt the profitability of their competitors because they have to follow?
Yeah. So we did have Tesla at the conference. They were not, presenting, but certainly hosted a lot of meetings with investors. I think that's exactly right. I think Tesla message is we will remain nimble on price. And essentially, this is one of the main levers that they have in order to keep boosting demand. And obviously, Tesla has very strong growth aspirations in terms of how many more vehicles they want to sell. In order to sell those in a potentially softening market, they would, be looking to lower prices, accordingly. Our view, though, has been that the direct competition to Tesla is not really the GM and Fords of this world. GM and Fords really make their money from pickups, from SUVs, from very large vehicles, which are extremely profitable. And that's going to be their strategy in the EV world as well. I think that's where Tesla is essentially cutting prices, is Model 3s, Model Ys. These are smaller sedans, smaller crossovers. There's no real direct competition or overlap, with GM and Ford. So I would worry much more about, maybe, Japanese automakers, Korean automakers, Chinese automakers that are competing directly, with Tesla in the models where Tesla is cutting prices, rather than, the GM and Ford in terms of the direct Tesla impact from lowering prices. But certainly on Tesla itself, this is an absolute risk. I think further price cuts. I'm not sure to what extent the market is very much ready for it. The demand is there, the deliveries are there, but, the risk of price cuts is certainly something we're very mindful of.